journey of angel investments. Thank you.
No, first of all, I'm really honored to be here. I'm a chartered accountant. All of my co-founders are chartered accountants. Our only colleague who is in Dubai is a chartered accountant, and we are a very large number of chartered accountants in the firm. And probably the only firm globally as a venture capital firm which has run by all chartered accountants, right? And I sometimes joke that, sometimes chartered accountants are so deep, they sometimes don't like to take risk of running a business, right? It's very different. And we have 200 portfolio companies almost in the country, and only 2 companies out of 200 have co-founders who are chartered accountants. That tells you the percentage of co-founders that are chartered accountants. But when I landed in Dubai and Abu Dhabi, I met a lot of entrepreneurs in the last 2 to 3 days. And I can tell you many of these were chartered accountants. I'm so happy that in this region of the world, chartered accountants have done phenomenally well businesses. I'm very, very proud to see that about the profession here. So with that, we'll just talk about some of the topics today. Feel free to stop me. I'm happy to answer many questions that you have, and that's more important, to answer the questions. I really wanted to thank CA John George for having us here. Really thankful for the opportunity. And Paddy, I think you spoke very well today as well. So thanks for your kind words. A couple of things you asked me to cover, so I'll have noted them down. But I have a question for the audience from what you said, right? If you were to invest in 10 and 9 were to go bad, would you really invest? Hands up. 4 or 5. So, Sir Mohan Das Pai, sir, his nice advice is a great advice, but only as many will invest if 9 were to go bad, right? By the way, I was like that. So when we started, we said, अगर 9 खराब होगी, एक ही अच्छी चलने वाली है, तो भाई कोई इन्वेस्ट करने वाला नहीं है, इसको बदलना पड़ेगा, राइट? अब अगर इसको बदलना है, तो हमने पहले वो 9 देखी. वो कहते हैं ना, सक्सेस इज अ लाउजी टीचर, राइट? तो एक तो चलो हो सकता है बाय लक हो गई हो, पर ये 9 को समझना बहुत ज़रूरी है. हमने 9 को देखा तो उसमें डेटा बहुत सारा मिला. डेटा से समझ में आया कि ये 9 अलग अलग कारणों से फेल हुई. अगर आपने वो कारण उसमें से निकाल दिए तो सक्सेस होने के चांसेस बहुत बढ़ गए, राइट? अगर आपका बच्चा आईआईटी जा रहा है या सीए पढ़ने जा रहा है, कुछ तो पास 1% हो जाते हैं, सीए के प्रोफेशन के जैसे ही है, लेकिन कुछ गिरीश ओझा की क्लासेस भी लेने जाते हैं, कुछ विनोद जी की टैक्सेशन पढ़ने जाते हैं, कुछ अकाउंटिंग पढ़ने जाते हैं, आर.डी. शर्मा एंड ऑल सबने देखी हैं. सो वो एक एजुकेशन सिस्टम बहुत ज़रूरी है, और उसके ऊपर वैल्यूज एंड एथिक्स. Sorry, my bad, I'll speak in English. It feels like India. He said we are the 3rd largest ecosystem of unicorns here. It felt like I'm sitting in India. Since morning I'm taking all cabs, I'm speaking to them in Hindi. I felt like I'm in India, so my apologies. I'll be in English now. Yeah. So it's important to understand those 9, figure out what do we need to educate to become successful, whether you are in IIT or in CA. Second thing we are taught in CA is ethics. Ethics and value systems are very important for us to teach to our founders, whom we treat like kids, to be able to succeed in life. Only when the two come together, the real success happens, right? So that's what we wanted to change. We have been able to change that 9:1 ratio significantly. In fact, we have turned the tables around. Today, if I ask you, if you were to invest in 10 and only 2 are failing, will you invest? Let's put the hands up, right? That's exactly what we wanted to do, right? So with that, let's get into some education. This is not working as well. I think it might be a problem in my voice. No, it's okay. I'll run with this. Thank you. All right. I can move around as well, if my voice is not audible. So I'm a chartered accountant. I was lucky enough to be able to complete my CS and ICWA also, gold medalist ICWA. CS top 10 ranks in Foundation Inter and Final, CA rank holder Foundation Inter. And then I worked for 5 years for Unilever, then 10 years for GE, followed by TPG Capital, and in between Wildcraft. We also founded India's largest CXO network, which is the forum of CFOs, CHROs, supply chain officers, etc., which come together to solve any given problem in 10 minutes in the country. That's getting launched in Middle East as well. Some brochures on your tables. My co-founder, dear friend, Ankur Mittal, a very diverse background. Again, another fellow chartered accountant. Proud and lucky to have him around, with me in the journey. And then Rahul Wagh, another chartered accountant with KPMG, spent 15 years here in this market. We are proud to have you, Rahul, as well. And again, another person, Pankudi, who recently joined our team. Thanks for being with us, Pankudi. It's a pleasure to have you, another chartered accountant. Awesome. So the question we wanted to discuss today was, bonds and stocks are known. And I think in Dubai, even the real estate is known, right? So what do we want to look, is there an asset class that we want to look beyond and why, right? So that was the conversation we wanted to do. The investments in businesses are the most productive assets because an entrepreneur is working hard to add value to its customer and to its stakeholders, to its shareholders, to the board, to the consumers, etc. And therefore, why we should look at investing in startups, first and the foremost is to be able to grow your country. Countries grow when there is job creation. Countries grow when there is innovation. Yeah? If I may take a very stark example. Anybody knows the market cap of Apple? We all use Apple. Any hands up? It's about 3 trillion. Right? What is the GDP of India? 3 trillion. One company, market cap is equal to the GDP of the entire country. By the way, that country is the largest population on earth. Yeah? And if you look at many other companies in the US, top 10 by market capitalization, 7-8 companies will be run by first-time management. Which means that these companies were born in your own lifetime. And if you had a chance to invest in any one of them, you would be a billionaire today. Right? That is the power of innovation. If an innovation can be funded and guided well early on, they can make you billionaires, they can make the country grow. Right? That's the point number one. Point number two is you will grow your business acumen. You will know far better how a business is run. Because when you invest, you engage. Right? You want to know how the business is running, and therefore you become far more understanding of the business. Today we were sitting in a very senior chartered accountant today morning, and we were telling him how we were discussing how the pan masala business works in India. And Ankur took that example. And we also showed how the business works. And when you look at the business, and I think this is one of the most senior chartered accountants here. He understood that, this is the real math behind the business, right? So when you do business, you understand it far more. Knowledge base increases in your own domain and your own profession. I think that's easy. Wealth is one of the pillars. Wealth is not the only pillar in investing. Yeah. So wealth is a byproduct of what happens to the business. Next is network, right? Whenever we do these events, people come together, they end up taking a few friends back home for life. Few smart friends back home for life, right? And that's why many of you come together, and many of you come together to discuss investments also. So you know who is smart, who is doing what, etc., and you can pool your knowledge and network. Last is to grow your enterprise. If you're a businessman, you can get many of these startups to become your vendors, to become your customers, to give you a dose of innovation of what they're doing already. Yeah. I know some of you are taking photographs, so I'll pause and before I move to the next page. There are some pamphlets and some notebooks on your table. If you want to write down your questions, please write down, and and we can take those questions in the end. India as a country And I've been told that Dubai is the cleanest city of India, right? So I'm kind of counting Dubai and, maybe the UAE market, as a part of the country itself, has seen significant growth in the last 10 to 15 years. We have had a fair share of success with BharatPe, which gave us an 80x return. But the speed at which the companies are growing is mind-boggling. If you came or you left India 15 years back, the country has changed dramatically. 15 years back when you left, maybe there was a problem even connecting to the internet, right? Today, we use 17 gigabytes of internet per month per user in the country, right? When you left the country 15 years back, the number of investments used to be very little. 15 years back, your parents will not let you marry an entrepreneur, right? 15 years back, you would not get funding for your business. Today, things have changed dramatically. The other thing I wanted to highlight is the returns that come from this asset class, which is, it's anywhere between a 20 to a 30% IRR. Now, we have a lot of fellow chartered accountants here and a lot of fellow business professionals here, right? I just wanted to know what is the return here in, let's say, an FD in Dubai or in UAE market? 5 to 6%, right? 5 to 6%, okay. So if you were to put $1 million at 5 to 6%, right? And you were to take that money back after 20 years for your retirement, let's say, how much that money would be at 5 to 6%? Smart people here, so I'm sure we'll have some great answers. Any hand raises? $1 million compounding at 5 to 6% for 20 years, what will be the number after 20 years? About 2 million? Yeah, it will be about 2.5 million. Yeah? Yeah, net, that I'll come to later. After inflation, there's less than $1 million. It's less than $1 million, not even 1 million, right? And just to put things in perspective, if you were to compound at, let's say, 26%, right? What will that number be in 20 years when you retire? How much? 40, 50, any other numbers? 100 million, okay. Anybody thinks 100 is right? Any hand raises for 100 million? One hand raise for 100 million? Two hand raises for 100 million? Yes, that's the number. That's the number. You have your calculators. Each one of your phone has a calculator. If you compound at 26%, it means the number becomes 10x in 10 years at 26%. Yeah? Which means in 20 years it will become 100 times. So choice is yours. $2.5 million or $100 million on your retirement. Yeah? And that was the exact reason when we started, we are all chartered accountants, we left our high-paying jobs to come to this because India professionals, which is the IBGP or chartered accountants or any professional you pick, a doctor, an engineer, and a lawyer, or somebody who's working in a job, has access to not more than 11% compounding in mutual funds. We knew this asset class does on an average 25-26%. And if this asset class becomes available to professionals like you and me, our worlds will change. Our children's education will change, our retirement will change, our medical insurance will change, a lot will change. Yeah? That was the purpose behind us leaving our jobs, coming into and making this asset class available to professionals like you and me. I mean, that's the purpose we are here for. So here are the asset classes, right? All of us understand these asset classes really well. Yeah. So gold, about 7%, thanks to the last 2 years. Before that, it was flat. PPF, you can't do more than, 1.5 lakh rupees. Fixed deposits, you guys yourself said 4 to 5%. Listed equities, 11%. Real estate, another 7 to 8%. Yeah. That's been the history of India. Over the last 10 years, yes, ma'am. Sorry? Yes, and then you add dollar INR depreciation of 4%, taxes on top, nothing is left. And then inflation, as a learned friend said, right? To give an example, okay, I'll just finish this and by this. To give an example, Mr. Rakesh Jhunjhunwala, a celebrated CA and an investor, right? And that's why I love him, and I bring a lot of his work back to my classes. He sold 27 crore worth of CRISIL shares in 2005 to buy a house. 2005, Bombay. In 2015, he sold the house for 65 crores. Great return. You buy a house for 27 crores, sell it for 65 crores in 10 years, great return, right? You will feel happy. But when you look back, the same CRISIL shares had become 650 crores. Now you feel happy or sad? Right? That's what he actually sold that house for. And that is why I started with that example of a 26% compounding or a 5 to 6% compounding. That's the difference it makes. If you look at that math of 27 to 65 crore, it compounded at still 8 to 9%. Yeah? But that was not, that will not give him happiness. There are various asset classes, maybe we'll come to that later, but it's just for you to take a picture of if you want, that how various stages of investments work in the investing world. What should you expect in terms of IRRs? What should you expect in terms of returns? And who are the players in every stage? The key thing to note that for professionals like you and me, we can only enter either in the angel or the seed stage. We cannot enter at a growth or a crossover stage, or you will enter at the IPO stage. There are only two places, early or late. And between early stage to IPO stage, do you know how much is the difference in number of X's? Any ideas? So if you were to come in, let's say, a seed or an angel stage and the company goes IPO in 10 years, how many times would that money be? 40, 50x? 30, 40? Let me tell you, in InfoEdge, invested in Zomato, he put in 4.5 crores in 2010. In 2021, when the company went public, it was 5,000 crore worth. This is 1000x. This is real numbers. Even today, InfoEdge, Naukri.com, 15% of its market cap comes from that small stake in Zomato. This is what we need to open our eyes to. Indian entrepreneurs or entrepreneurs in general create huge amount of value which is unfathomable. And we have a chance to participate in that. Yeah? Let me take a small activity for you guys. Again, another example where Policy Bazaar got invested by InfoEdge again. Right? How much return do you think InfoEdge made on Policy Bazaar? Just in a few years. It was not even 10 years. 80x is what people are saying. Right? B or C? D. Okay. 172x. So same investor in Zomato 1000x, Policy Bazaar 172x. And by the way, Sanjeev Bikhchandani is a graduate from IIM Ahmedabad. Yeah? And he invested from a corporate balance sheet. I can tell you, if many of you will have CFOs, or many of you will be anyway working with CFOs, if you ask them to put any amount of money in AIF or in a startup from a corporate balance sheet, from a treasury, how will they frown? They'll frown crazy, no? How can we take that much risk? But entrepreneurs who think right, they can still take multiple bets which can give them great returns. Yeah, that's what we need to be clear of. Otherwise, it will not even meet inflation. Yeah? So these are all real numbers, realities that we need to open our eyes to. People will not tell you this. In fact, even in CA course, do we teach personal finance? Foundation, inter, final? Why? Should it not be taught? Must be taught. So they must be thinking, oh, schools might have taught 11th, 12th, BCom, anywhere, personal finance. Isn't it shocking? No personal finance training. Personal health training in any of the courses? 10th, 12th. Why? They don't teach you why yoga. Because a large number of institutions, financial institutions, healthcare institutions are built on this basic knowledge. If they teach you that, don't put money in FD, 5%, put money somewhere else, then their business is gone. So they are incentivized not to teach you these basics. Opens eyes a little bit. Yeah? All right. So let's get to, a question. Simple question for accountants. Yeah? Here is 2 options you have. I'll be slow so you can absorb this. First option, I give you an asset where you invest whatever amount of money you want in the first year. It doubles every year. At the end of 10th year, you take the money out. Simple hai? It's simple math. Assume in both the options the taxation rates are the same. No long-term capital gain, no short-term capital gain. Let's assume a simple 30% tax rate. Common in both options. So you are not wondering taxes here and there. Option 2, you are putting the money in first year, taking the double out at the end of the year, re-putting back in the second year, and repeat this cycle for 9 times. But the start of the 10th year, I give you an asset which will now become 2.5x in 10th year. And at the end of the 10th year, take your money out. Is the question clear? Anybody not clear on the questions, on the 2 options? Anybody? First of all, question is clear to everybody? Okay. Option 1, you put the money in, it doubles every year, you take it out at the end of 10th year. Option 2, you put your money in, take it out at the end of year 1, it doubles, then you put it back, then it doubles, then you put it back, it doubles for 9 times, but in the 10th year, it becomes 2.5x instead of 2x. Right? Which option will give you a better return?
500, 600, that share came down to 180 or 150 something in the lower. It's an amazing share. Its price should be more than 1,000 rupees. KRBL in the popular name is India Gate, which we are eating on day-to-day basis. Why it was went down? Because there are lots of allegations on the name of the promoter and all. Still it is there, but it is solved up to large extent. So it's moved from 150 to 400, something like that now. So definitely when there is allegations, when there is a question on the promoters, when there is a question on the business continuity or anything, you should take a decision and you should take it out. But of course, I agree with you only in one point, trading. Trading, because you cannot give the time. But if it is your full-time business, it's not your speculation income, it's a business income, you should do. If you are from the speculation, don't do. But you need to decide from the business point of view, how's the business. There are many factors. But definitely, and one more thing, less than 1% people are, even less than 0.001% people are capable.
I think your point is right that only 0.001% people are capable, right? But the question to you, sir, is which option will you choose, 1 or 2? But I'm telling you, both are doubling every year. In the second option, you are going to have 2.5x in the last year, which will have a better mathematical return.
But why it will be 2.5? That was my question also.
It's a CA का एग्जाम में सर पेपर तो सेट हो गया, मैं कुछ कर नहीं सकता.
सर वो तो एक स्टॉक रिटर्न x दे रहा है, दूसरा x.25 दे रहा है.
All right, sir.
चलो.
Option 1 will give you 10 crore. Option 2 will give you 3 crores. Option 1 will give you 10 crores. Option 2 will give you 3 crores.
सोचना ही नहीं उसमें तो.
Or sorry, yeah. Yeah, it will. That is our brains are not capable to do compounding. Our brains are not that capable of doing compounding, right? Now, question is, why did this happen? Mathematically. Why did this happen mathematically? Yeah. You are in the right direction. There's a small piece that needs to be added here. Yes. What is happening is, because there is a 30% taxation, at the end of year one, when you doubled your money, you have to pay taxes of 30%, and that money is no longer compounding. No, taxes got introduced now. That is why generally I don't bring in 30% tax. Yeah, I agree. Maybe corporate is investing. And that's why I specifically introduced 30% tax, right? That is the power of tax as a cost, right? And the compounding that works over periods of time. Many of you are still shocked. How will 1 lakh become 10 crore? It's simple, sir. 2 raised to the power 10 is 1024. 2, 4, 8, 16, 32, 64, 128, 2, 256, 512, 1024. WhatsApp का group ऐसे ही बढ़ा हुआ है. Right? All the mathematics, all computer science people will do it immediately, right? So 1 lakh multiplied by 1000 is 10 crore. Yeah? So that's how things are impactful. And therefore I wanted to play a video from Warren Buffett at this point in time, and that will explain the concept of trading and also explain the concept of how we master ourselves as investors. Stuff that he made in this very small video. It is the crux of everything in investing. The biggest enemy you have in investing is yourself. That's exactly what he said. Right? You can't blame anybody else. And that's when we set up IPV, we made sure that you have the right to choose. You choose where to invest, how much to invest, when to exit, etc., etc. The choice is back in your hands, even in an early stage investing. Yeah? And if you noticed, he gave credit to God, which means that luck also plays a part. Right? And that's important to recognize. We have to be ready, we have to be working hard, we have to do what we need to do. But if corona occurs, some startups die, yes, they will. That's part of the luck. We invested in Bharat Pay, UPI wave came, it gave us an 80x return. Did we plan for it all? No. We did our parts. Right? Moving on, independent thinking is the crux of investing. We typically end up buying high when there is a lot of interest, and we end up selling low because we are fearful. And that is what a logical mind needs to flip. If we don't flip, we end up with the opposite. The next part, which is very important, is one has to be probabilistic in investing. We took an example here where we took an experiment of investing in very early stage companies. Very high risk of failure. We took 8 or 10 companies, all less than 10 to 15 crore valuation, and invested. So we took 7 companies or 6 companies that are here. Let's say you were to invest 1 lakh rupees in each one of them. Yeah, you invest about a total of 6 lakhs. 2 companies have died. Now 2 out of 6 have died here because they are very early stage. But if you look at it overall, the first company gave 3 lakhs back. Second company is already at 20 lakhs, 23 lakhs. Third company is already at 20x, another 20 lakhs, 43 lakhs, and then another 4 lakhs. 47 lakhs on the 6 lakhs that you invested. Right? This is real numbers. Right? So one has to understand the probability of going up multiple times, because the maximum probability of it going down is only 1x. But going up is multiple x's. And if you can find that, And this is the whole portfolio that we took and gave you an example of how even this stage of investing can work really well. So critical is to focus on the process of picking up founders, process of picking up, the businesses, rather than what fails, what succeeds. If failures are happening, learn from them, change the process, take the failures out. Next piece is very important. I asked you guys a question in the beginning. If 1 is succeeding and 9 are failing, how many will invest? 2 or 3 hands went up. Even if that 1 would have given you 100x, still only 2-3 hands will go up. Why? That is how we are brain wired by God. When we make a return of a 2x and we feel happy, right? And we lose the same amount, we feel unhappy 10x. So our amount of unhappiness of losing a certain amount is 10 times the amount of happiness by gaining the same amount. As accountants, many of us may be CFOs, and I can relate to you, when there is a revenue coming less, we don't focus too much. Cost, we focus a lot. How many of us focus on revenue? Few of us. Right? That revenue could give you far more profit than focusing on that small part of cost. And that's what an entrepreneur or a business person needs to change. He has to look at the pura P&L, the full P&L. What cost am I spending? Therefore, what revenue will I get? How much more profit can be made in what turnaround of money? So what happened here, and this is what's very important, is one of the examples I'm taking, and what are the repercussions of this for investors, especially early stage. Let's take this as an example. Let's say you invest in a company. Let's say you take 90 shares of a company, and they give you an option to exit at a 3 times the money in, let's say, 1 year. In 1 year, the money goes 3x. Will you invest more, or will you exit, or will you hold is the question. How many of you will exit if something goes 3x in 1 year? 2, 3, 4, 5, 6, 7, maybe 10 people will exit if something goes 3x in 1 year, right? How many of you will hold? Another 15, 20, 20. So more people will hold. Anybody will do in between? Think about it. Only 1 hand went up in between. That is where the magic lies. Let's see. Let's say person A exits fully and he's happy because he made 3x. Person B exits nothing. He keeps the money. Person C exits half. Right? Let's say the company goes 0 next year. What will happen? Person A is happy because he took the money out, the first question. Person B will be very unhappy. He went from 1 to 3 to 0. He is losing his mind. Person C will still be happy because he's taken his capital and 50% out more. But other situation can also happen. The money can go 9x now next year, 3x again. What happens now? A is unhappy. He took out everything at 3x. He had the opportunity to go 9x. But person B is happy now. He kept everything. The second hand raise. But see what happens to Charlie. He's still happy. We sometimes don't see the power of the middle path. So that's where we have a very proprietary formula saying the number of shares you hold multiply by 1.n divide by x is the number of shares you should exit. And this is, by the way, a real example at IPV. The company Fable went and we offered an exit at 3x to so many people. People didn't take. Not many took, some took. Then we offered an exit at 9x. Then company was valued at 30x. And we said we want to take an exit. The board said, hold on. We are raising the next round at 100x. That round never happened. Funding winter kicked in. it went to 0. But some people were smart. Few were smart. Because just like the 2 hands went up, only 4 or 5 people took that partial exits and they made money even when the company went to 0. Right? So that's the kind of stuff we need to know and understand in investing, especially as retail investors, which we are. Right? A sophisticated investor can handle both sides. He can keep more, less, keep less, or continue to exit or continue to hold basis their strategy. But for a retail investor, this is very, very important to understand when to enter, when to exit, and how much to exit. Yeah. I mean, we have a lot of biases. Each one of us is a bundle of emotions and a bundle of biases. Some of us may go into the country saying, oh, this country has a lot of corporate governance issues. That's a bias. Look at data. Some of us have a recency bias. We're looking at the rear view mirror. We're saying, oh, last year the markets did do so well, it will do so well in the future also. That's a recency bias, may not be true, and so on and so forth. And we need to be understanding of our own biases when we invest. And the best way to do that is 3 or 4 people should get together and put a vote on the investing. That allows you to take out the biases and take out a neutral or a very common view. When you do voting, please give reasons of why you are voting, so that other person can see the reasons behind your yes or no. Yeah? All right, let's get you active once more. There's a QR code on the screen, and we want to know some poll from you guys. Let me know if some of you cannot scan, or if it is scannable at the back. No, scanning is not necessary. You can go to menti.com, menti.com. It will ask you for a code. That code is 59240448. I'll repeat, menti.com, menti.com. It will ask you for a quiz code. That code is 59240448. It will have the first question. We will let everybody enter the first question, then we'll go to the second, and then we'll display the results. Rahul, how many have we got? 46. We have got 46 people entered. Okay. We'll wait for a couple more minutes for others to enter. The code is 59240448. Yes. They did ask you for your name yet? Yes. That's fine. Hold on. Yeah, because we are registering everybody in, it will move once everybody else comes in. All right, now it should show you an option to enter your name, I guess. Yep, you can enter your name. So Rahul, let us know whenever you hit 50. It's 59240448. Yeah, submit the code. Then it will ask you your name. Enter your name and say submit. It will hold you till everybody else has entered. It will hold you till everybody else has entered. So Rahul, how many?
53, 55.
50 is done. All right. So I'll move to the next one. I think it will ask for your other couple more details. Yeah. Enter the number. Submit. It will hold you till others have entered. Yeah. Email it. Yeah. You can put your email address and then we'll hold you till others have entered. How many, Rahul? Email? 57. All right. Then the next question is what holds you back in your perspective from investing into startups? And we can show the bar graph live. So this is how you are entering the inputs. It's a very interesting result here actually. When we do it at other places, it's item number 5, which is on the top. So we have got 60 responses. You guys are saying that the risk attached to the startups is the biggest factor that is holding you back from investing. 21 people are saying that. 17 people are saying that you don't have access to great startups. This is very interesting because yes, this market doesn't have large number of startups. Next, you are saying that liquidity is a problem. If I want to sell my stock, will I be able to sell? Then you are saying size is not a problem. Yes, this is a rich market, we understand. Size is not a problem. 20 lakhs, 10 lakhs we'll have if you solve for the other three, right? Huh? That's what I'm saying. Size is not a problem. We'll put 20 lakhs, 30 lakhs, 1 crore, but give us the right three. And then you're saying mortality, we are willing to take the risk, which is very interesting. We are willing to take the risk, right? Now, this is what we call as smart way of solving the problems. If you noticed, the first letter of the problems is S, M, A, R, and T. This is when we started IPV, we figured these 5 big problems and we needed to solve. Remember the first question? 1 succeed, 9 failure, will you put in? People said no. That was the mortality rate question, right? So what we figured, and if we can continue Pankudi, is that size of the ticket was very big problem in India. You needed to put 40-50 lakh rupees in one startup and you needed to put it in 10, and therefore the total kitty became large. We solved it by bringing 1 lakh rupee ticket size, so everybody can invest. The second problem was mortality. 95% used to fail. At IPV, out of 180 companies invested so far, only 8 have failed so far. That's about, we've turned the tables. As you guys said, Mohandas Pai's statement, 1 will succeed, 9 will fail, not here so far. Next, access to startups. We look at about 7,000 startups a year that are available on the platform. 7,000. We look and we do deep due diligence on about 150. 50 we make available for investing to you guys. Risks. Our average IRR has been north of 45% annualized. I'll pause here. You know what 45% means? We took the example of 5%. 5% became 2.5 million. 26% became how much? 100 million. 42% will become how much? It will become 1 billion. 2 million, 100 million, 1 billion. That's the difference in these IRRs. And that is what we saw when we said, oh, this needs to change. We need to make this asset class available to this community. Yeah? And then last was liquidity. We have 10,000 active investors on the platform, and more buyers and more sellers means more liquidity. During Corona, a lot of our members wanted money back, health issues, people lost lives. Each and every single family, we were able to return the market value of those investments back to the family because we had the liquidity and the investor base at IPV. Not a single family was stuck. And at AIF, if you're coming through AIF, it's far more easier today. We can help you find a buyer. May not be in 1 day, 2 days, but we can find it at a reasonable value. And we don't have to go back to the startups to take approvals, to go and take other ROFR or board approvals, etc., or founder approvals, right? So that's how we solved for these 5 problems, and that's why we call most of our investors as smart investors, and we give out smart investor awards also typically. Yeah. All right. Some of you asked, what is the track record? And this is the track record on the screen. Yeah. Sorry. We have made about 10 full exits. I'll let you read the IRR if you can. It's 125%. I'll not ask you to redo the math at 125 again. Another 20 plus have gone for a partial exit. What does that mean? We gave you the choice to exit or not. And everybody who exercised the choice could exit. Some others decided to hold. There also the average IRR has been 190%. And another 40 plus have gone for follow-on rounds at an IRR of 100+%. our own failure share of about 8 companies out of 180 plus, right? So we have had failures as well. This is a part of the game. We can't stop every failure, but we've been able to cut it down by looking at the failures that occurred, why they failed, and fixing them in our evaluation process. Yeah? Hopefully helps you get a perspective. Why does that happen? Because we invest differently. When there was a downturn between FY15 and FY18, it was boring to invest. Nobody was excited. We were investing heavily. And when the upturn came in 19, 20, 21, 22, we were exiting heavily. All of these exits, Bharat Pay is so strong, Card 91 happened during FY21 and FY22. And by the way, this was the time people wanted to invest heavily. We were oversubscribed on practically every deal. We were bringing less number of deals during this time because we did not want to expose ourselves at high valuations as much. And again, now there is a down cycle where the number of unicorns are less and we are investing heavily again, which means the results should show in the next 2 to 3 years. And therefore a great time to invest. And that's why we are doubling down on our investments right now. We are bringing great deals, great valuation, so people can invest. Yeah? And it's up to you guys to decide whether you want to be fearful along with the market and not invest, or figure out boring time, fearful time to go and invest, right? So that was, one message. The other reason we succeed is because we do a deep due diligence. We look at 7,000 a year, invest in 50, less than 1%. And post-investment, we help the founder build a business. That's called the Let's Grow program. Many of you are a part of some Let's Grow program if you are at IPV. And then we work with about 800 plus private equity and VC firms to help them raise the next rounds and help our investors get exits as well. As recent as last week, 2 weeks back, we exited one of our portfolio companies to a listed entity. I think within 2 years, we made 3x, right? So if you make 2 years, make 3x, it's more than 100% IRR, right? So that's the quality of work that we do across the ecosystem and some of the smartest teams that we have. Ankur, do you want to take why now?
So I'll just keep it short and I'll open it up for Q&A. Some of the interesting things that Vinay touched upon. Did everybody generate that 46% IRR? No. And that is the investing part that Vinay was talking towards the end. What happens is that we are more of a sentiment-driven investor. वो Economic Times बोलता है, this startup has become a unicorn, this startup has become a unicorn in 6 months, so on and so forth. We feel we are missing out on something. We get FOMO, fear of missing out. We feel, we are missing out on a gravy train. It will not come back. Let's put money. A lot of you thought that, in the beginning when he asked when to invest, everybody said buy low, sell high. How many of you bought Tesla, Google, Amazon 1.5 years back when they all were at their 52-week, 104-week, 200-week low? Many people got scared. As if people will stop Googling, if people will stop taking, Tesla cars. I know so many people. We have invested in a startup called Vested, which helps Indians invest in US equities. We asked our founder, how many people are doing transactions? This is the great time to invest. So I forget private markets. I am talking about trillion-dollar companies, and people don't invest when the times are there. Today, they are at, again, all-time high. Everybody wants to invest in them again. So, this is the funding trend. Today, what market is going through, you are reading news, Byju's is going down, Unacademy is firing people, Bharat Pay's founder is having problem, and you are thinking all startups are bad. You are thinking this is all a make-believe world, it's a mirage. But the exits that Vinay is talking about here, people have taken money back home. People have actually taken money back home. If somebody has got 41x, we got a picture of somebody. He invested 5 lakhs, he got 2 crores, he bought a BMW 5 Series, he took a photograph, sent it to us. We wanted to run an advertising campaign, buy BMW 5 Series in 5 lakhs. We were stopped by our PR team. But it's a reality, it happened, right? So, it's a new asset class. The reasons why startups fail is not because of lack of information. This is one thing everybody will think. You actually have more information available to you in private market. We do quarterly board meetings. Any of you who is an investor in those startups, as some of you are, you can come ask founder the questions. When was the last time you went and asked a question to Mukesh Bhai when Reliance was presenting the results? None of you. Hope maybe some of you are big fund managers here, so some of you may be having dinner with him personally. So I'm in a region where I should not assume, right? But that is the reality. Okay, so we are going through a time where the sentiments are down, but this is not the crisis of 2008 and 9 when it was a liquidity crisis. Each one of you look inside your bank and pocket and touch wood, hopefully everybody is flushed with liquidity. My friend wants to buy an X7 in Dubai. He's an investor with IPV. He was telling me, in 5 months he has not been able to get a car. Apparently on Range Rover the wait is even longer. The house market of Dubai is all-time high. So this problem is not liquidity. Same in startups. Good startups are still raising money and funds are sitting on a lot of capital. They are all waiting for sentiments to change. What sentiments are these funds waiting to change? When exits start happening on the bigger deals, it will release up their capital, which will flow into the early stage deals. But this is one slide I will leave you with, and then I will open it up to Q&A. It's easier said than done, but every bad time, Vinay mentioned all these startups which are $1 trillion. In 2001, right after .com crash, Google was raising Series A. Many of us were working when .com crash happened. Yeah, we had cleared our CA, paycheck started coming in, right? We went for FDs. Some people went for Google. It is difficult to fathom. In 2001, Google was nothing but a Series A funded company. In 2008, 2009 financial crisis, even I had a chance to invest in Uber. But I did not have the minimum ticket size, which is the first problem, ticket size. They were looking for at least $150,000. The startup bug had caught me. I had the opportunity, but it's okay. The opportunities, these were all startups then. All startups. Our pandemic created unicorns out of Zepto. Latest unicorn. Started by 18-year-old kids from Dubai. Both the founders are from Dubai. Right? Went to college in US, left it, came to India, started Zepto. Right? So, startup investing when done well can give you results. It's up to you to decide. It's a trigger. But in very short, what IPV is trying to do here is, understanding, but there are failures also. So I wanted to leave with you on this. It's not like we have succeeded. 8 startups out of 200 has failed. That is significantly lower than anywhere else. Why is our due diligence process, not just of our team, which is 200 people strong, but also our investor base? I've got people like Rajiv also here who have, looked at our platform. They do their own due diligence. They take our material, they add their own material, they decide. We have people like them also. We have people like some who depend on our due diligence. And that's okay too, right? There are all different kind of investors. Now some investors have come to us saying that, Ankur, we don't have time, you invest on our behalf. We have created solutions for that. Then we also have now created a VC fund where If you really don't have time and have a bigger investment capacity, you can look at that. So different solutions, but this is very important. Failures have happened, mistakes have happened, but lessons have come. What has gone, so it's another, a lot of learnings. These are, out of our 8 startups, one was because of COVID also. We couldn't control it, right? But most of the time we go wrong on founders. This is again not just specific to private market. Even in public market, Dhirubhai Mani had 2 sons. He divided the businesses. We know how those 2 startups work. It's all public markets. You will see some very large businesses going down, founder driven, right? So, and we may not know at the beginning what will work, what will not work. Probably telecom had a very great future, right? Today, Jio is doing all the money making. So, markets will find their own winners. We will have our own learnings. So that is what I would just like to end. We had Mr. Sanjeev Bhikchandani, the person who made money not just in Zomato, but this. Invest in founders, not businesses. Build rapport with founders. Nudge the founder, don't instruct. And, basically invest with coordination. And that is where a platform is much more helpful than individually. But if you have the capability to do it individually, great. But if you have not, then join other similar set of investors. Anything you want to add? So with that, I'll open it up for Q&A. I hope, sir, I'm well within my time. So happy to take any questions now. On investing, on India, in economics, hopefully whatever is our capability, we will answer.
Hi. And thank you for bringing the entire investing to us. My question has the big ticket size, as you said. So now you are bringing to 1 lakh rupees minimum, right? So my question is, if you have 10,000 people, maybe only few of them will invest in a particular company, and then each will invest, let's say, 1 to 5 lakhs. Then how does, so how does that will help to spend
We actually spend far more time trying to understand what are they going to use with that capital. Because if they have not thought through what they are going to do with your money, they are going to raise and sit on it, and our IRR will get affected because our time starts from the day we transfer the money. Now, what we do is, as a platform, we collect the capital from all the investors, and then as a single check, it goes to the startup. So the startup will get the money from either one source or multiple sources, but it will be able to raise money that it needs. Now, this is what we call the funding winter happening. Sometimes it is possible that the startup is not able to raise the money that it desired. Then we rework on the business plan with them, and we still make sure that the critical objectives still get achieved. Certain hirings may get delayed, certain development features may get delayed, but at the end of the day, the journey has to keep on moving forward. No. So if we are eventually able to raise 10 crores only, the first question we will ask ourselves is, will 10 crore make a difference to the startup? If it's, let's say, startup which in less than 50 crores, they can't do anything, then we will not even transfer this 10 crores. Because there is no point, it is as good as burning those 10 crores. But so therefore somebody who's raising 50 crores, only 10 crores, we will probably not transfer. But if somebody wanted 50 crores, we are able to raise only 40 crores, we will transfer the 40 crores, redo the business plan of 40 crores, and then raise after another 12 to 15 months, or whatever the time period is.
But generally, if we have not raised the minimum amount that we have committed, we refund.
We refund.
India-based startup. For a short-term capital gain, it is your minimum marginal rate of taxation, which could be 20%, 30%, 40%. For a long-term capital gain, it's 20%, but you have an indexation available. So the effective taxation rate comes to around 15%.
And in private markets, the time period is 2 years. In public markets, it's 1 year.
Yeah.
In private market, less than 2 years, it's short-term capital gain. More than 2 years, long-term capital gain. And so you can invest it via that fund. The tax rates stay the same. The tax rates don't change.
For the AF2 it is different, right?
No. It's
Category
a pass-through
3.
entity.
Category
In the
3 is
sense,
different.
You will get the returns. So let's say on your 1 crore, you have made, let's say, 5 crores, gain of 4 crores, and assuming it's long-term capital gain, we will deduct the taxes, transfer the rest of the money, but that tax is your tax. You have to show your returns In your return, you will show 4 crore gain, this is my tax, and that's how it will happen.
But sir, there is something called a category 3 fund also, which we don't operate. In that case, you get the money net of taxes. So there is a category 3 that you're talking about.
One more question from my side. Basically, do you invest only in India startup or you invest in worldwide, UAE and other markets also?
Excellent question. So we used to invest outside India startups also. What has happened is that currently, while we have investors from 46 plus countries, I would say 70% of our investor base is India. And therefore, the commitment that we make to these startups is largely based to a great extent on how the Indians are investing, India-based investors. But SEBI has added a lot of regulations, so no longer you can invest in private companies outside India via the LRS route. You have to go through the ODI, Overseas Direct Investment, which has become another set of complications. And for the fund, you have to get a SEBI approval to transfer money outside India, which SEBI has almost stopped giving since last July to 2022. Since July 2022, I think only one fund has got an approval in the private space, and that fund is yours truly, our fund. Even we could use that fund. There was a problem there also. They gave the fund approval for some other entity. So it has almost become impossible to invest outside India. So currently, focus is India-based startups, which again also happens to be the growth engine driver for the next 10 years. So we are not missing out on any growth by investing in India. But the objective of us being here is over the next 2 to 3 years, like we have built it in IPV in India and globally, build a decent investor base in the GCC region, also in Singapore and similar UK, US, which will allow us again to invest in the deals outside India purely based on the investors outside India, so that we are no longer dependent on the capital of coming from it.
So in summary, we are open to global investing. We have done global investing, but in the recent times, there are restrictions by SEBI and the approvals are not coming through. We are open.
Normally, AIF required minimum investment of 1 crore as per the SEBI regulations. So how you slice it up, 1 lakh
Sure.
investments?
So-
And I have one more question. How the Sharpe, you know that Sharpe ratio for private investment will be high, low compared to the public market. So how you mitigate the ability to take risk and willingness to take risk by the individual in these investments?
We have 2 funds, category 1 and category 2. These are SEBI defined categories. And in category 1 fund, as per SEBI, your minimum is 25 lakhs that you have to invest over a period of 5 years. And you decide in which startups you want to put that money. So you can decide money to be invested on a deal by deal basis. We can of course help you if you need. We have that program now. And you can start investing with as little as 1 lakh rupee per startup. We give you, as a part of AIF, up to 5 startups in which you can invest up to 1 lakh, and then you move to 2 lakhs. So 25 lakhs would still give you an ability to invest in 15 startups, which in my opinion is a very good portfolio. So far out of 208 have failed, some more will fail. But what it is telling you is that if you invest in 15 and all 15 fail, that's a very, very low probability, touch wood so far. Right? So it helps you create a good portfolio. The category 2 fund, as per SEBI, is 1 crore. There we take the investment decision. You give us the money over a period of 18 months. And there we are minimum taking 3.5 crores. We are not taking 1 crore. But of course, as an exception for, because of our partnership we are initiating, we'll be happy to consider it. But otherwise, we are not really taking 1 crore checks there. There we take the investment decisions.
Sure. So the willingness and ability is a lot of work on education. Just like we took the education class today, our job is to open up minds to real education. So once you are educated well, you are able to mitigate risk is when you want to take the risk, right? So what we need to make sure is people are educated, aware and trained to take the risk so that they can change the willingness and ability for better results. That's a very key important part in changing the willingness.
See, reducing the investment ticket size is also in a way mitigating risk. Why we are allowing you to do a small investment up front? It is not, if you can only invest 5 lakhs in startups, please don't invest in startups. Okay? There is a possibility you may lose 5 lakhs. Okay? Like Rakesh Jhunjhunwala said, commit the mistake where you can afford the mistake so that you can live another day to make another mistake, provided you learn from the previous mistake, right? The only reason we have reduced that ticket size is to help you take that first trigger movement, which is investing in a startup. Because what happens is, you can stand on the edge of the swimming pool, you will never learn swimming. You may have VR tomorrow, AR tomorrow, you may do all the practice on a computer game, and you may think you know swimming, but till the time you jump in the pool, even on the shallow end, you will not learn swimming. Because your brain tells you, the moment you are out of breath, you can always stand. But only when you are on the deep end, and you throw yourself in the deep end, that's where you will really start learning swimming, because you know you can't stand if you want to. So you have to learn how to breathe. So that is why we have reduced the ticket size, because it's our Indian mindset. We don't like to lose money. So even if we put 1 lakh, we will do our due diligence, we will be involved in post-investment, and all that stuff. And that helps you move forward in the process.
One is, do you have any information memorandum or a website or a data room which kind of answers most of the questions that investors might typically have? So that's question one.
Yes.
And question two is, how much is the GP commitment? If you can quantify that, that would be helpful.
Excellent questions. In the investor sections, you have all the FAQs that will address all your questions, including AIF taxation. On regards to GP commitment, we are probably the only angel network in the world where, so the way we look at the processes, we evaluate 7,000 startups in a year. And through the filtration process, which includes deal evaluation, feedback forms, DD, post-investment analysis, we end up investing in less than 1%. We invest in 50 to 60 deals in a year. What is the process is that after the due diligence, it's a mini IC between Vinay, Mitesh and I. If at least one of us is willing to put our own capital, then only that deal gets showcased to other investors. It will be at the same valuation, same class of shares, everything is the same. But are we willing to put our own hard-earned money into that startup after the due diligence? If we don't get the confidence of putting our own money in that startup, we will not take it to anybody else. Of course, we have heard the other side of the arguments. Who are you to decide that if just you don't want to put your money, why should the other put money? But that is our process. So we will be investing in all the deals. The check size will depend upon more about a function of our liquidity and how much it is being raised versus other factors. Similarly, in our VC fund also, out of the current commitment, almost 10%, more than 10% comes from us. So, we are used to putting our, money where our mouth is. And what we believe is, and not just us, his father, his sister, his brother-in-law, my mother, my brother-in-law, they've also put money with us. Because the fact of our friends, they've all put money with us. We never went to ask them for money. I've never, but it's all referral. 90% of our investor base is referral. I went to a function a couple of months back. My in-laws hosted. And this was the first function my in-laws family hosted after 3 years of COVID. I meet my friends very often, but I don't meet, extended family very often. I met 3 relatives of my wife who are IPV investors. I did not know them. But they knew me because of my photo on the, places. But they told me, we did not know you are Ankur Mittal. Who is that Ankur Mittal? Married to ours. So, there are a lot of people who are invested with us.
While we do the referral draw today, I've just changed a little bit more. Whoever has put in the card also gets a $200 AED voucher. 200 dirham voucher, my bad. Right away. So Pankudi, if you can circulate that through as well. And others can just scan the QR code if you want to join for free, the trial at IPV. That's the right-hand side scan. The left-hand side is if you want the 200 dirham discount today itself, valid for today, then you can scan the left-hand side QR code as well. Sorry? Sure. So the way it works is because we get you access to large number of startups, to large number of pitches, and to maintain your relationship managers, you get so it is based on an annual subscription fee, which is very low in the industry as well. So that's the platform fee annualized, which one needs to pay to be a member of IPV. That pays for our relationship manager salaries basically. This is the annual fee, yes. Yes, irrespective of whether you invest or not. Yeah.
Because
Yeah.
when we started angel investing,
Let Pankuri add something.
If you can please educate us a little bit on that, because that seems to be a barrier to entry, and information on that would be very helpful, especially from an NRI point of view, if you can.
So people don't invest in unlisted companies, which would have been otherwise their income, convert into long-term capital gain and pay only 10% tax on it, right? So they wanted to curb that, but during that curbing, even the startups came into the picture. So to cover for that, and government understands that, they said if you are DPIIT registered, then angel tax will not be applicable to you. And they have now made the rules common for NRIs as well as for Indians. That's all they have done. But last week, new rules have come out where they have said if you are invested by an AIF, then angel tax also will be exempted, right? So that's another piece that they varied last week.
you see, a lot of these laws are not done for startups. They are done to curb some bad business practices that unfortunately many of our brethren would have only come up with, right? One of us would have only been advising, कि अच्छा पैसे कर दो, do this, route it, double tripping, round tripping, this, that. So a lot of these laws are created to curb some bad business practices. Unfortunately, some of our regular businesses get curbed. When the government recognizes that, they take a step back, they have added more valuation methodology, so on and so forth. So we expect a lot more clarity to come over the next 6 months, 8 months, but the steps have already been taken there.
What kind of risk profile would go in for angel investing? Would it be somebody who's already secured initial investments in the rest of the options and then decides to go for a higher risk, high return kind of an approach? Or are you seeing that more and more people are actually thinking of this as an option to start with, or have it somewhere in the mid tier of investments? I just want to get a general view of what is your point of view on this, and what are you seeing in the market as
Happy to answer.
what kind of person is investing?
Right, a portfolio management firm. They ask you how much return you expect and how much loss you are willing to take. While our endeavor has been to bring down the failure rate and thereby push up the success rate, what I tell my investors is invest the money that you are willing to lose. So that is your risk profile right there. Our objective will be to keep improving the processes that you actually make money. But when you enter, that's the amount that you should be willing to lose. Now that will vary from people to people to people. Okay? That is one way to look at it. The other way to look at it is that we don't recommend even that you put your entire investment into startup investments. Startups, in our opinion, should be a good start from a single digit percentage of your portfolio. Learn, generate money, get the money back, keep increasing your portfolio. Your confidence will increase in the system, in the process, in yourself, in your abilities to pick startups, and keep building. The most important step is to recognize, and that was the question somebody asked, that where, you need today, because of the inflation of 5-6% and then tax and this and that, and of course, people in UAE may not be exposed to taxes, but if you are investing in India, that many of you are still paying taxes, right? 10-12% return just helps you preserve capital. It does not help you grow capital. So if you want 20% plus capital, you'll have to take a little bit additional risk. But start with amount you're comfortable with.
And I'll add one more thing. If we look at data, the highest number of people on the platform today are between the age of 45 to 55. And the largest amount of investment comes from people who are in the age bracket of 50 to 60, which we never expected to be honest. We thought more young people will do it. But our data is telling us something else at IPV.
But there's a reason for that. House is paid for, car is paid for, kids are studied, right? But by the time you are hitting 35 today also, see, life has moved 10 years further. Today, 35-year-olds have the same amount of disposable income that we had when we were 45, or some of us at that age, right? So that has also changed. So investing has started a little earlier than what it would have 10 years back.
Yes.
Absolutely. So we are one of the only platforms in the world, maybe again, who have built a proprietary scorecard where we evaluate a startup on a 30 plus parameters, and there are 5 to 6 sub parameters on those 30 parameters, right? There we look into the sustainability of the business, the market disruption, the technology, the supply chain, the exit opportunities, and most importantly, the founders and the scalability. And this is what we do for every startup. You download our app today. You can go to Android Play Store, Google, or Apple iStore, and you can go and download Inflection Point Ventures. And you can start listening to the calls from Saturday. But more importantly, for the calls that have already happened, you will see these scorecards, valuation summary reports on there. So we actually do rate so that when we succeed, we can go and find out what we got right. And unfortunately, where we fail, we can also go and find out where we went wrong. You can also find it, we can also find it, because the data is published. So we are not scared of our failures. Some failures will happen. It is all there in black and white.
Sure.
Then the third question is with regarding to the profit sharing. Sorry, basically, is there any slab for profit sharing?
Sure. I'll answer all three. First question is how many investors on the platform? 10,000 approximately. The second question is 600 crores invested. What is the AUM? It's about 1,300 to 1,500 average range right now. And the third question is the profit sharing. In a normal scheme where you are investing and putting your time in, we don't ask for any profit share. However, if you don't have the time and you want preferential allotments, etc., then the profit sharing scheme kicks in, which is the Premier Plus program. There the profit share is 12%. No profit share. No profit share, no annual management fee. Yeah, absolutely. That's how we made it available to professionals like you and me. Very low membership fee, 1/10 of the industry. No management fee, no carry fee for normal professionals who can give in the time. Those who don't have the time or want extra preferential, that's where the profit share kicks in, just to be very clear.
So 90% of the investors on a platform do not pay any profit sharing. I don't think there is any other platform in the world which does not charge.
Yeah.
Okay, we invest in every deal as individuals after doing the due diligence. I put myself in your shoes and look at the deal, look at my bank balance, look at my upcoming expenses, and then I decide how much money I can put in. Okay, so that's an investment process, but I have to put in money before. Now, if I think that, okay, I can't put in money because of financial reasons, then I'll show the deal to him. He has to still take a decision on merit whether he can put money or not. If we decide not to put money, whether financial, whatever, then the deal will not be shown to anybody on the platform.
Yeah. All right. I think that's all. Any more questions for us? Happy to answer. I know we are standing between you and dinner, right?
So you had asked a question, how many people have generated those returns? I overheard that. How many people got 41x? I think 60?
About 54, 55 people got 41x 2 months back. 1 month back. Yeah.
So, see, the thing is, it's a function of what startups you have selected. Now, we showed you a real presentation where we started a program called Wonderkid Wednesdays, where we looked at deals under 7 crores. And those 7 deals were all under 7 crores, which Vinay calculated it, would have given you 4.7x. 4.5x. Right? So in 3 years, it has given you 5x, including 2 failures. So even after 2 failures, it's giving you 5x. So if somebody would have invested in all 7, that would have been their returns. But if somebody only picked up those 2 that failed, then of course that's
so the critical.
If somebody picked up the first 3 deals, they would have been sitting on, much higher return.
So critical item is to build a portfolio of at least 15 companies.
That's why we say build a portfolio. You will miss some good deals. You will pick some great deals. It is bound to happen.